ambitions, the aspirations, and the dreams of the American people. It is time for a new generation of leadership in America.
We will make America strong, safe, and we will make America great again.
A very warm welcome. You're watching Market Cafe on ET Now. This is Priyanka along with me, Shriyansi. So the big day is here. It's shaped up to another winning presidential election day for the US stocks. But then preliminary results have started coming in and now the exit poll. That one shows that Trump wins 59% of the white male voters, whereas Harris wins 38%. Now this marks the Trump's share down by 2% from what came in as in 2020. This is as per the Edison research. Now Trump wins 12% of the black voters. Harris has a big margin here. She's winning by 86%. This one, the Trump shares looks unchanged from 2020 data here also. But then the key, that lies with the swing states, the 7 swing states, which are also called as battleground states. That one holds the key to election in Michigan, Pennsylvania, Arizona, Georgia, Wisconsin, Nevada, North Carolina. And now a lot of data which is coming in from these battleground states, especially states like Georgia, which has 43.6% of the estimated vote tallied so far, has Trump with 55.3% of share, and Harris has 44.1%. He's taking a lead here in one of the swing states. Now, projections also show that Trump with 90 electoral votes, Harris with 27 as of now. 270 is what is needed to win presidency outcome, of course. So a lot of action the whole day. It's action-packed, and that's what we saw even on US streets also yesterday.
Well, absolutely. You know, that key that you just talked about in terms of the swing states, that is something that the markets also were waiting by for. So when you take a look at stocks, what you're looking at is that during the regular trading session, you did have stocks rallying ahead of the results of the US presidential elections. A sign that the equity market at this point is anticipating possibly former President Donald Trump will win, an outcome that investors do expect will be positive for stocks. When you take a look at the Dow Jones, you're looking at a rally coming in of just about 1% coming in for the Dow Jones. When you take a look at S&P 500 as well, 1.2% advance is what you're looking at there as well. Now, Goldman Sachs, of course, is predicting that a Trump win and Republican sweep of Congress would spark a 3% pop in the S&P 500. Even a Trump win and a divided Congress would also be causing about a 1.5% gain. So that is something that Goldman Sachs is penciling in. And on the other hand, in terms of other scenarios, then they're looking at a Harris win with a divided Congress that would cause a 1.5% drop in the S&P 500. That is according to the Goldman Sachs. The big question that the market, of course, like I mentioned, is waiting by to get an answer to is who's going to take the Oval Office. And Trump's agenda of tax cuts could give corporate America a tangible boost. With steep tariffs is something that you're also penciling in when it comes to Trump's victory then, and a potential global trade war is also something that you're keeping an eye on under his presidency that could cause more uncertainty and a resurgence of inflation. So that is one scenario, and in a Harris administration as well, you do have the risk of tighter regulations that could bring more scrutiny to industries, the likes of banks and healthcare, while Democrats' support for clean energy could also be lifting electric vehicle companies as well as solar farms as well. Now, at this point, Trump has surged past 100, while Harris is trailing at 71. But this election is, of course, considered one of the most significant in recent US history. And that is also the kind of move that you saw coming in terms of the US markets. There's a lot that is being watched out for at this point.
Absolutely, a lot being watched out, and in fact, not just US markets, even let's get you a data point from crude also, and even Asian markets also. Now, the crude oil prices that rose about 1%, as of course it's a big day. Voters in the US are headed to the US polls. Elections are coming in. Data point has started coming in. US US crude oil, that has gained 35 cents or nearly 0.5% to settle at $71.82 per barrel. Brent crude was down by 0.5%. That one is trading though above $75 per barrel. But then US crude futures, that has jumped over 1% on what we saw on Monday. Post OPEC Plus members countries, they agreed to delay a planned December output increase by 1 month. But then, West Texas Intermediate, that has jumped by 1.5%, trading at $70.47 per barrel. And Brent yesterday, that jumped by 1.37%. Now, gold, which is a safe haven, that is trading at $2,750 per ounce. And if you talk about the 10-year Treasury yield, because this one, it's a very key economic indicator to be watched out. We have Fed policy coming in now. That one is trading 7 basis points higher at 4.6%. Even the yield on the 2-year Treasury, that was up by 6 basis points to trade at 4.27%. Of course, yield, they have inverted relationship. And of course, a big watch would also be on the Bitcoin because, as it said, that Trump is a supporter of the cryptocurrency. So we'll keep a close eye on that also. But then, yes, dollar index, because Trump is in a favor of strengthening the dollar. This can be really volatile. It's believed that if Trump wins, the dollar index can get stronger. Right now, it's gaining, it's gained 80 basis points, trading at 104.23 mark.
Well, absolutely, and there's a lot that we're watching out for. Let's also take a quick look at the Asian markets then and see what that screen is looking like. Because when you take a look at the Asian markets, you're looking at a higher open coming in across the indices after that Wall Street surge that we told you about. When you take a look at Nikkei on your screens, 1.5% uptick for that one. You do have the Bank of Japan's monetary policy meeting minutes that will be released later in the day, which could also be giving insights on where the members stand on the bank's policy path as well. Let's also take a quick look at South Korea's Kospi then. That is the one that's clutching on to that shade of red coming in. On your screen, 0.6% downtick coming in for the Kospi as well. Hang Seng, a little bit of a downtick coming in for Hang Seng as well as Shanghai. Hang Seng, 1.1% downtick coming in, and Shanghai on your screens, although it has reversed course at this point, so 0.3%, 0.4% uptick coming in for Shanghai as well. Let's also take a look at ASX 200 and on your screens, 1% uptick coming in for that one as well. So largely when you take a look at the Asian markets, Nikkei is the one that's clutching on to that shade of green. ASX 200 is also following suit, along with Shanghai as well. That is also reversed course and is holding on to that 0.4% uptick as well in trade. So that is largely what we're looking at in terms of the Asian market action. Now, of course, you do have the 5-day meeting of China's National People's Congress, and that is something that we're watching out for. But when you take a look at what the Nifty shut shop at, 24,213 is the kind of level that we were looking at when we shut shop yesterday as well. And what we're looking at in terms of what is being penciled in is a rather muted start. Market just sort of waiting by for some of those cues, Priyanka.
Absolutely, and the kind of smart recovery what we saw on Indian markets yesterday, and though it looks like a softer start, but a strong set of cues coming in from US, preliminary data coming in from the US election results. This all, of course, will draw the final picture. But then, of course, it could be a volatile day for India also. What are the global cues that we are keeping a watch on? Of course, a lot of PMI data has to come in from many countries. India's PMI data has to come in. From Eurozone, its service PMI data has to come in. Even from Japan, their composite PMI data has to come in. And on the front of global earnings, Toyota, Honda, Novo Nordisk, and Novelis, they would be on the tap. Back home, talking about the Indian Nifty earnings, Power Grid, Apollo Hospitals, and Tata Steel, this one would be on the tap. Let's not forget, metal could be volatile. It could be on the upsurge again because there's a 5-day meeting happening in China. There are talks about more stimulus coming in. But then this would be the last day to buy shares if you want to be eligible for the dividend. If you want to keep a watch on, you have to keep a watch on GSK Pharma, Naveen Fluri, Nuvama Health, and Shriram Finance Symphony. These would be the kind of stocks for traders who are keeping an eye on dividend stocks. And of course, primary market, a lot of action. Swiggy opens up today, as well as Acme Solar Holding opens up for their subscription today.
Well, absolutely. And the biggest cue, though, that we're looking at is who's going to get the keys to the Oval Office as the counting of ballots is underway. In the US, early in-person and mail-in votes are expected to be tallied first lost in most states. Republican candidate Donald Trump won 10 states, including Florida, Indiana, Kentucky, and more, while Democrat Kamala Harris as well won Vermont, New Jersey, as well as 4 other seats as the early projections started trickling in as well. Now remember, that data is currently going through an update because we do have, Kamala Harris just trailing and Trump leading at this point. Remember, over 82 million people in the country took advantage of the early voting to cast their ballots. Let's also go across to my colleague Malvika Jain, who's standing by with a mood check of the counting day. Malvika, over to you.
Well, I should mention that, what tends to happen is that states that typically vote for the Republican Party, there the voting ends sooner because the United States is divided into 9 time zones and voting started at 7 a.m. Eastern time. And if we were to look at it based on the Eastern time, until 12 a.m. voting will continue, and Hawaii and Alaska will be the last states where voting is going to happen. So all that we are hearing right now are early results, early voting results from the red states where counting has already started. Here in the state of Maryland, the voting just concluded minutes ago, and in the adjacent room now, counting has started. So this is a typically blue state, and we do not yet know what the result will look like. What we are hearing from our colleagues at CBS News is also polling data, predictions that are coming in. But as we have seen in elections back home in India, polls are just representative. What will happen ultimately is anybody's guess, especially since this has been such a close race, and you've had both Democrats and Republican campaigning aggressively. The campaigns, the candidates, and also the volunteers, especially for the Democratic Party, they've been knocking door to door, and the Trump campaign has been focusing on flashy big events and the pack that's led by Elon Musk and such influencers.
All right, thanks very much, Malvika, for all that insight. So, of course, US has 9 time zones, and more results and more data point would keep pouring in. We'll, of course, show them as per they came in. But then we'll stay for a short break here. More to come on the other side of the break. We'll get you stocks which could be buzzing in the trade today, as well as the brokerage notes. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in to Market Cafe, and let's get you some more news and updates. We're going to be shifting focus to the MSCI reject. Let's put the spotlight on that one because there's a host of changes that are likely to be taking place on the MSCI Standard Index. So when you take a look at the announcement, that is going to be on November 6th, that is today, effective November 26th as well. And flows are expected from November 25th. In fact, let's get some more details. Somit is standing by with a roundup of that. Somit?
The MSCI changes will be announced on November 6th, but for India time it will be November 7th early morning, and the changes will be effective on the index from November 26th, but the flows regarding the same are expected to happen on November 25th. So what are the changes that are expected by the analysts on the street? 5 stocks can be added to the MSCI Standard Index. Now there is high probability of these 5 stocks getting added, but a borderline kind of probability when it comes to 1 stock getting added. Out of the 6 stocks, 3 are fresh additions, while 3 of them are moving from the small cap index to the standard index. Apart from that, it's the HDFC Bank which should be in focus, given the fact that its weightage on the MSCI index is expected to increase by nearly 1.6 percentage points, which could lead to an inflow of close to 1.5 to 1.9 billion US dollars. So keep an eye out for HDFC Bank. Apart from that, a few additions to the small cap indices that we should keep an eye out for is Newland Labs, Brainbreeze Solutions, which is First Cry, Jyoti CNC, and Ola Electric. These companies are expected to see the highest inflow in the small cap index. Now, which are the stocks that we need to keep an eye out for in the standard index? On the fresh addition side, it's Adani Energy, Kalyan Jewellers, Oberoi Realty. These stocks are expected to see an inflow of anywhere between 190 to 310 million US dollars. Apart from that, it's Alchem Laboratories, BSC, which could see an inflow of close to 200 to 250 million US dollars. Now, Voltas also has a chance, but a borderline kind of probability of getting included in the MSCI Standard Index, and if it happens, then the inflows in Voltas would be more than $300 million US. On the flip side, it's GMR Airports and Bharat Forge which have a high probability of seeing a reduction in their weightage, which could lead to an outflow of close to 30 to 110 million US. So keep an eye out for all these stocks in trade. November 7th early morning is when the announcement will be out, and the flows regarding these changes will happen on November 25th.
These stocks could be on a move today, but then Somit, GAIL and Oil India both have reported weak set of numbers in Q2. What were the factors behind this? Please take us through the breakup.
Have come in on the oil and gas space. GAIL and Oil India both have reported a weak set of numbers compared to what the street was estimating. Firstly, on the GAIL side, if you look at, the revenue was 3% below estimates, EBITDA was 7% below estimates, margins came in more than 50 basis points lower compared to what the street was expecting, but the net profit number, that was 5% higher, but this was on the back of lower depreciation, lower tax rate and higher other income. If you remove these facts, then the number was way below than what the street was estimating. Now, if you look at the company's depreciation, it was down nearly 22% on a sequential basis. Other income was up nearly 92%, and that was the main reason why the net profit number was higher, while the effective tax rate for the company in the second quarter was also lower at close to 22.6%. Now, it was a miss driven by poor performance in the marketing and the transmission segment of the company. Now, the transmission segment was a miss on the back of higher cost, while the marketing segment was a weak number despite the favorable commodity environment that we had seen. Apart from that, the petrochemical and the LPG numbers are pretty much in line with what the street was estimating. When it comes to the Oil India numbers, the revenue was 7% below estimate, EBITDA was 11% below estimate, margins came in more than 500 basis points lower than what the street was estimating, and the net profit number was nearly 14% below the street estimates. Now, it was a weak set of numbers on the back of lower production and sales number that we had seen. Apart from that, it was the high exploration cost write-off also which impacted the net profit of the company. Now, oil production and sales were lower on the back of lower planned work over wells and lower contribution coming in from old wells. Also, if you see the oil and gas production and sales number were way below the company's target as well in the second quarter. Apart from that, the company's subsidiary, that is NRL, also reported a weak set of numbers on the back of shutdowns and lower GRMs that we had seen in the second quarter of FY25.
All right, thanks Amit for that roundup coming in. So there you go, that's about GAIL and Oil India. Those are the two stocks to watch out for in trade today as well. Moving on to Motown then, Hero Moto unveils Xpulse 210, Extreme 250R as well as its electric vehicle Vida Z for global markets as well. They also revealed their new Charisma XMR 250 at the event. Pawan Munjal, Executive Chairman, Hero MotoCorp, said that the company will soon be launching operations in UK as well as Europe. Here's what we got from the top boss, Pawan Munjal, at the launch there.
The lineup contains three premium products, which is, you saw the Extreme, you saw Charisma in the 250, and you also saw Xpulse 210. Clearly, it signifies and further reinforces our foray bigger and bigger into premium segment. As I had said earlier as well, we already have an exciting lineup portfolio in the premium with Extreme 160, Xpulse 200, Maverick, Charisma and Harley-Davidson X440, and these three products are going to add further to the portfolio.
And talking about Vida, well, that's a brand you showcased last year also. This time Vida Z, especially here. EV market, can you tell us more about how do you plan to come to Europe or expand in UK and Europe with more of Vida Z?
First, I want to talk about that you would have seen our press release that we have done very well in the festive season with Vida, clocking 11,600 units. And we're going to launch in 4 countries of between Europe and UK with Vida next year. Plus, in India also, we're going to expand the portfolio to cover the affordable range. So you will see a lot of product action on Vida in the next 12 months, I would say.
And talking about UK and Europe, well, these two markets, we're coming here. What is the short-term plan and long-term, where do you see them growing or contributing to Hero MotoCorp?
See, I won't talk about any numbers or long-term plan as such. It's the first time that we are entering Europe and UK market. As you know, we have not been in any of the developed markets so far. So this is our first foray, and this covers the 4 countries where we start with Vida, and then we will also launch our performance motorcycles later on. So that's the plan.
About the outlets, will they be Hero MotoCorp, or you have some other outlet plan in mind which will be under any other brand?
No, it will be through distributors. So we have appointed exclusive distributors for each of these countries, as we have done in all other exports markets.
All right, with this moving on, let's get your report from the insurance space. And in a move that could impact non-life insurers' premium calculations by 25,000 crore, IRDA has issued new directions to insurance companies. ET now learns that the regulator has mandated non-life insurers to report premiums on an annual basis, which is effective from October 1. Anurag Shah is joining us with more details on that.
Non-life insurance companies would be able to underwrite long-term policies in motor insurance, health insurance, but will not be allowed to show the premium in their books. So IRDA has disallowed long-term premium in their insurance companies' books because IRDA found huge discrepancies in the commission paid by the insurance companies. So if a EOM of a company was increasing but commission was decreasing, so this was a major reason IRDA has disallowed insurance companies to book the long-term premium. So now onwards, so every year insurance companies has to book the premium for long-term policy. So if a policy is of 5 years, then total premium divided by 5 will be booked every year, and subsequently the commission will also be paid every year. So this will impact the overall gross written premium of the industry, and as per our sources, around 25,000 crore of premium will be impacted. Presently, the non-life insurance industry is of 2.9 lakh crore. So around 10% of premium will be impacted. Companies will not be able to show in the books, although underwriting will be allowed. As per our sources, companies have also requested IRDA to allow them to use different terminology to show their yearly premium, just like as used in a life insurance space, which is a APE, annual premium equivalent. After finding the discrepancies in the commission paid by insurance companies, IRDA has taken this decision.
All right, thanks Anurag for that update coming in on non-life insurance as well. But time for a very quick breather on the show. When we come back, we'll get you some more news and updates, so don't go anywhere.
Welcome back. Some respite coming in from the future and option data also, but Ansh is here to give us a complete snapshot on F&O and the what is the positioning of FIs on index future looking like, how has retail fared up. Ansh, over to you.
Right, so let's start with Nifty first. On Monday, actually, Nifty had given a breakdown from its consolidation of that 24,100 to 24,500, but it seems to be a false breakdown because in the previous session, we have given a good pullback and Nifty has closed around that 24,200 mark, indicating continuity of that consolidation pattern. Now, if we talk about index options, then we are seeing call unwinding happening at a 24,300 strike, indicating the call writers who were expecting Nifty not to cross this 24,300 has cut their positions, which is a positive sign. Also on downside, we are seeing most active put writing happening at 24,200 strike, indicating very good support base around this level. Now shifting to Nifty Bank, if you can see the chart, Nifty Bank has been actually hovering around that 100 DMA from last around 23-24 session with a max deviation of just 2.5 to 3%, indicating a strong consolidation phase. In index future also, we are seeing that it has the open interest has gone down by around 6%, which indicates short covering, which is also a positive sign. Also on charts, actually Nifty Bank has formed a bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside. So overall, Nifty Bank looks very positive. Also, if we talk about stocks that are in focus, then we are seeing significant long build-up happening in JSW Steel, Jubilant Food, Manappuram Finance, where short build-up happening in JK Cement, ABB India and Berger Paint. So keep an eye on the stocks.
Well, absolutely, Ansh. Thanks for that roundup coming in. So Titan is the one to watch out for as well. Let's keep it going with some earnings reactions then and earnings updates then, because you do have a weak Q2 for Titan as well. Margins were below expectations, but amid the festive season, India jewelry business is up 25%, at least on a year-on-year basis. In fact, Snehi is standing by with the earnings fine print. Snehi, tell us a little more about what the second quarter was like.
Well, yes, so it's been a weak quarter from Titan this time around. Overall, it's been a miss if you see on EBITDA, PAT and margin basis. However, revenue, the top line has done slightly better than what we were expecting. The earnings fine print on a standalone year-on-year basis, EBITDA has gone up by 13.3%, revenue has gone up by 13.3%, come in at 13,215 crores. EBITDA is down 16.4%. Now, the net profit is the one to watch out for because that's come in at just 705 crores compared to 950 crores, which is down 25% on a year-on-year basis. There was an inventory loss due to the custom duty cut, and this has been factored into the net profit figure, and this is impacted the overall profitability by 290 crore rupees. Margins have also shrunk quite a lot, come in at 8.6% versus 11.6%. However, when you take a look at the segmental results, jewelry seems to have done decently for itself. Revenue is up 25.5%. EBIT, however, has fallen 22.7%. Margins have also shrunk. Like-to-like growth has come in at 15%. This is in line with what we were expecting. Studded has seen a double-digit healthy growth. Solitaire sales have been affected amid soft international prices as well. For watches and wearables, revenue has gone up by 19%. Analog segment has done well. However, the wearables revenue is down 13% as well. Eye care, the revenue has gone up by roughly 7%. Emerging business continues to be a loss-making business this time around as well because the EBIT is also negative. But if you take a look at what brokerages are making of these numbers, Investec has maintained a hold rating, cut the target price to 3,822 from 4,100 crores. Jefferies has maintained a hold, but has also slashed the target price to 3,400 from 3,600 earlier. And lastly, Goldman Sachs has also maintained a buy rating, cut the target price to 3,650 from 3,750 earlier. Overall, a weak set of numbers coming in for Titan from Q2.
Of numbers coming in, EBITDA and PAT both miss, and brokerages have cut the target price in. Let's see how traders react to this one now. Thanks so much, Snehi, for all that breakdown on the stock. With this, it's a wrap on Market Cafe, but don't go anywhere as market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.